Right now, the global electric vehicle market is worth over $2 trillion. BYD sold nearly 4 million EVs in 2025 alone. Tesla, even after its worst year on record, still moved over 1.6 million cars. Politicians are passing billion-dollar incentive bills. Automakers are betting their entire futures on a single technology. The EV revolution is the biggest industrial shift of our generation, and everyone wants credit for it. But here is the thing nobody talks about. The company that actually started all of this, the one that built the world's first highway-capable, mass-produced electric car and sold it to the public before any of those names were even relevant, that company is not leading the charge. It is not even in the conversation. It is barely in the market. I have spent 26 years operating businesses across Asia. I have watched this industry from the inside, and the story of Mitsubishi Motors is the one that keeps me up at night, because it is not a story about failure from weakness. It is a story about a company that held the future in its hands and watched its own boardroom drop it. So let us go back, all the way back to the year everything should have changed. In 2009, the global auto industry was terrified. The financial crisis had just shattered consumer confidence. General Motors was filing for bankruptcy. Ford was mortgaging its own logo to survive. Oil prices had spiked above $140 a barrel the year before, and the question hanging over every executive in Detroit, Stuttgart, and Tokyo was the same. What happens when oil does this again? Into that wreckage walked a small Japanese car maker with something nobody had seen before. In July 2009, Mitsubishi Motors launched the i-MiEV to fleet customers in Japan, the Mitsubishi innovative electric vehicle. It was tiny, it looked a little strange, but it could merge onto a highway, cruise at 130 km per hour, travel up to 160 kilometers on a single charge under Japanese test conditions, and it used zero petrol, not a hybrid, not concept, a real production car you could buy and drive. The Guinness World Records later confirmed it as the first electric vehicle to sell more than 10,000 units. PSA, the French group behind Peugeot and Citroën, immediately struck a deal to sell their own badge-engineered versions across Europe. The world was paying attention. Mitsubishi had cracked the code that everyone else said was still a decade away. The question was never whether this car mattered. The question was what Mitsubishi would do next. The i-MiEV did not happen by accident. It was the product of years of quiet, obsessive engineering work inside Mitsubishi's technical teams. People who had been running electric vehicle experiments since the company put EVs on Japanese roads back in 1971. By 2007, those engineers had done something remarkable. They convinced Mitsubishi Motors, along with GS Yuasa, Japan's leading battery manufacturer, and Mitsubishi Corporation, to form a joint venture called Lithium Energy Japan. The purpose was singular: build a world-class lithium-ion battery pack specifically for the i-MiEV. The result was a 16 kilowatt-hour, 330-volt pack with a specific energy of 109 watt-hours per kilogram, a serious technical achievement for that era. They then spent a year running 37 development cars through 300,000 kilometers of real-world testing across Japan, alongside a further 200,000 kilometers in Europe. These were not dreamers. They were methodical engineers who understood that early adopters, the people who would buy this car first, were not buying transportation. They were buying proof. Proof that the technology was real. Proof that the future was already here. The engineers gave them that proof in abundance. Mitsubishi held a genuine years-long head start over every rival on Earth. What they built in those labs was not just a product, it was a platform. And the tragedy of what came next begins in a room those engineers were never invited into. If this story is hitting different for you, subscribe right now. Because what happens next is where this becomes a masterclass in how to destroy your own advantage. In Japan, corporate culture has a word for the consensus-based decision process: nemawashi. Literally, it means going around the roots. Every major decision must be agreed upon by every layer of management before it can move forward. In many industries, patience produces extraordinary quality. In a fast-moving technology race, it produces something else entirely: paralysis. The engineers at Mitsubishi wanted to scale. They wanted to build factories, drive down battery costs, flood global markets, and lock in the first-mover advantage that was sitting right in front of them. the executives in Tokyo saw a different picture. The i-MiEV was selling, but it was still expensive. The global EV market was unproven. The safer bet, the bet that Japanese corporate culture was wired to favour, was to wait, to study, to gather more data. While Mitsubishi gathered data, the car's battery pack stayed at 16 kilowatt-hours. The platform barely evolved. No serious investment went into the next generation range. No aggressive pricing strategy emerged to compete on volume. The engineers who built the future were watching their own company treat it like a research project rather than a business. This was not incompetence in the traditional sense. These were intelligent people. But they were running an institution built for survival, not disruption. And in 2009, survival and disruption required completely different decisions. In December 2010, Nissan launched the Leaf, a real, mass-market, purpose-built electric car with a more aggressive marketing strategy, stronger dealer network support, and Nissan's full corporate weight behind it. Mitsubishi had a 17-month head start in Japan. Nissan used those 17 months to study everything Mitsubishi had done and build something more scalable. Then in 2012, Tesla launched the Model S, a 265-mile range, a 0 to 60 time that embarrassed sports cars, a tech-forward interior that made every other car on the road feel like it was designed in a different century. Suddenly, the conversation about electric vehicles was not about whether they were viable, it was about whether they were excited. Tesla changed the psychological frame of the entire industry. Mitsubishi's i-MiEV, with its 62-mile EPA range, its unchanged 16 kilowatt-hour battery, and its K-car proportions, was being lapped. The Nissan Leaf would go on to sell over 500,000 units globally. The i-MiEV would sell around 32,000 in its entire lifetime. Mitsubishi had handed competitors a textbook and then refused to write the next chapter themselves. The window was not closing, it had already closed, and the Tokyo boardroom was about to make it worse. When the money had to go somewhere, Mitsubishi's executives made a choice. Rather than doubling down on the technology that had given them global recognition, they diverted resources toward plug-in hybrid crossovers. The Outlander PHEV launched in 2013 and did reasonably well in Europe. Safe, sensible, profitable in the short run. Exactly the kind of decision a risk-averse board makes when it does not fully believe in the thing it accidentally invented. The logic was not entirely irrational. Hybrid SUVs were selling. The EV market was still small. But the compounding effect of that choice was devastating. Every dollar that went into the Outlander PHEV was a dollar that did not go into a next-generation battery platform. Every year the i-MiEV sat unchanged was a year the gap between Mitsubishi and its competitors widened. By 2019, Mitsubishi quietly ended international production of the i-MiEV. The world's first mass-market electric car died not because the technology failed. It died because the people who owned it decided it was not worth fighting for. In April 2016, Mitsubishi's entire remaining credibility collapsed in a single press conference. The company admitted it had falsified fuel economy data on 625,000 vehicles sold in Japan. The manipulation turned out to cover 20 models across a decade, going back to 2006. The practices, investigators later determined, had roots stretching back a full quarter century. The market reacted instantly and brutally. Mitsubishi's stock fell 40% in 2 days. The scandal wiped $2.5 billion from the company's market capitalization within 48 hours. The president resigned. The financial damage was assessed at 205 billion yen, roughly $2 billion, for that fiscal year alone. The company posted its first net loss in 8 years. There is a specific cruelty to this moment. Mitsubishi had built its late reputation on environmental credibility. The i-MiEV, the Outlander PHEV, a brand image built around clean technology. And now the world learned that behind the green marketing, executives had been lying about fuel efficiency for decades. The trust they had earned from the EV project was obliterated not by a competitor, but by their own hands. What happened next was not a rescue. It was a takeover dressed in the language of partnership. Carlos Ghosn, then CEO of Nissan, moved quickly. On May 12, 2016, with Mitsubishi's share price down 43% from its pre-scandal level, Nissan announced it would acquire a 34% controlling stake in Mitsubishi Motors for 237 billion yen. In dollar terms, 2.2 billion. Gosson said publicly he was confident the deal would prove to be a bargain. He was right. What Nissan bought at a crisis discount was not just a struggling automaker. It was the patent portfolio, the engineering talent, the battery partnerships, and the manufacturing infrastructure of the company that had invented the modern mass-market EV. It was the crown jewel of an innovation story, purchased at the price of a company in ruins. Nissan already had the Leaf. The last thing Nissan needed was an aggressive, independent Mitsubishi EV program competing for the same market. What followed was predictable. Mitsubishi's EV ambitions were folded into the alliance framework under Nissan's direction. The student had absorbed the teacher. As of 2026, the new Mitsubishi BEV arriving in the North American market this summer is built on the next-generation Nissan Leaf platform. The pioneer of the mass-market electric car is now launching its first new pure EV in years, using technology it acquired from the company that once learned from it. Walk into a Mitsubishi dealership today. The lineup is the Outlander, the Eclipse Cross, the Mirage, and the ASX. Mostly internal combustion, mostly crossovers, a PHEV here and there. The Outlander PHEV, while technically impressive, is not a statement product. It is a survival product, a car designed to keep the lights on while the company figures out what comes next. The i-MiEV is gone. There is no flagship EV, no technology showcase, no product that says we are the company that started this revolution, and we are still leading it. In 2026, Mitsubishi's Momentum 2030 plan promises a new or refreshed model every year until the decade ends. The first pure BEV for North America arrives this summer. There is cautious optimism in the press releases, but the numbers tell a different story. BYD alone sold nearly 4 million plug-in vehicles in 2025. The company that Mitsubishi helped inspire now commands roughly 20% of the global EV market. Mitsubishi's share of that market is a rounding error. The ghost of what this company could have been is visible in every competitor's success story, every clean tech press release from Nissan, every record quarter from BYD, every new Tesla delivery milestone. All of it was built in some measure on the proof of concept that a small team in Japan handed to the world in July 2009. Clayton Christensen, the Harvard economist who coined the term the innovator's dilemma, spent years studying why great companies lose to smaller, seemingly inferior competitors. His conclusion was uncomfortable. It is not laziness or stupidity that kills innovators. It is rational decision-making inside systems that were not built for the future they helped create. Mitsubishi did not fail because its engineers were wrong. They were right. They were exactly right, years before anyone else. Mitsubishi failed because the institution surrounding those engineers was optimized for a different game. A game of quarterly survival, conservative capital allocation, and consensus decisions made by people whose careers were built on not being wrong. The EV market in 2026 rewards one thing above all else: the ruthless willingness to cannibalize your own business before someone else does it for you. Tesla bet the company on a single product. BYD committed its entire supply chain to a technology the world had not yet accepted. Mitsubishi invented the proof and then treated it as a side project. There is a lesson here that goes far beyond cars. Inventing the future gives you a head start. It does not give you the finish line. The finish line belongs to whoever dares to run through everything standing between the invention and the market. Mitsubishi built the spark. The world took the fire. If you have made it this far, you already think differently about innovation than most people do. Subscribe, because this is exactly the kind of story we tell here. The ones nobody else is looking at. See you in the next one.